Yo, what is going on YouTube? It is Evan Trades. Welcome back to another video. It's been a little bit since my last one. I've been kind of just honestly, I've been kind of working on some new content that I wanted to think, or not some new content, because I'm still wanting to do some trading education for you guys. That's never going to go away. I'm always going to be trying my best to help you guys out. So, I've just been trying to brainstorm and think of new ideas, talk to people of what we can do, and definitely what the future holds for the content on this YouTube channel. There's going to be a lot more better content, a lot more day in the lives, just a lot more better content for you guys. Just mix it up a little bit, to for you guys to see. But obviously, our main core is education and making sure you guys understand at least what I know to my knowledge, to my best. That's helped me with my trading. So, in this video, I'm going to be going over my 2026 trading model, Evan Trades 2026 trading model. So, I'm going to be trading this the whole year of 2026, and nothing has changed. It's been the same model I traded last year, maybe some minor changes. And we're going to be going over that. We're going to be going over exactly what it is and what it looks like, and an example on the chart as well, a perfect example for you guys. Actually, that just happened recently, and I'm recording this on the day of January 12th, 2026. So I figured why not best to start off the year with a trading model video, kind of like a refresher. If you guys are new, uh, I'm Evan Trades. Welcome back. Welcome to my channel. So if you've seen my videos and you don't know what trading model I trade, you are about to see in this video. And I recommend you join my Discord because a lot of us in there trade the same model and completely free Discord community. The link will be down in the description. So without further ado, yeah, let's get right into it. So I'm going to be going into what exactly I look for in the model. I have it written down, and yeah, without wasting any more time, let's get right into it. So the Evan Trades 2026 model. And I want to say first, guys, look, if you've been subscribed to me for a little bit now, you know that I learned pretty much everything deeper ICT concepts from Justin Werline. Um, I can tag him in the description if you guys want, or pop up his YouTube on the in the video right now, whichever one. I'll do one of those. I'm not trying to take credit. This is basically his model. I have it tweaked a little bit, just a little bit, but it's basically the same thing. The 2022 model of ICT. I'm not claiming, like, I'm not saying, oh, I made up this strategy or this trading model. I'm taking all credit. No, no, I'm giving credit where it's due. I learned from him, and he's the reason that helped me become, have a lot of success in my trading and consistency. But I'm just saying this is my strategy that I personally use, and for those people viewing me out there that don't know of Justin Werline, that just watch me, I'm just saying this is what I trade. So just wanted to get that out of the way in case there's any naysayers in the comments, any losers in the comments want to say anything weird. But anyways, the Evan Trades 2026 trading model, this is what I will be trading for this year, all this year. So the first thing I'm looking for going into the day is a higher time frame key level rejection, as in I mean a higher time frame PD array, higher time frame liquidity getting swept, something like that. Then I try to zoom in and look for a inverse fair value gap, basically a fair value gap getting ran through, getting disrespected, turning into an inverse fair value gap. Then I'm looking for a change in the state of delivery, basically signifying a new change in order flow in that certain model, the time frame that we're on. And an SMT, I don't always use SMTs, but if I'm looking for an A+ setup, SMTs are definitely going to be definitely going to be useful in this trading model. They're signifying strength levels in both. I trade NASDAQ and ES. So if NASDAQ takes a high and ES doesn't, or the S&P doesn't, that's an SMT. That signifies that there could be a possible reversal. So I use SMTs a lot as a confluence, and within the trading model, I'm targeting either opens, like midnight open, 8:30 open, unfilled imbalances below us or above us, and either just resting highs or lows as well. So I'm going to be going on the chart, explaining, and one example that I have, it's a perfect example. You guys will really understand it, and it's going to be awesome. So this is my model going into 2026. Very simple. As ICT once said, your trading model should be very simple. Your strategy, you should be able to write it on a business card. It should not be paragraphs. It should not be multiple sentences. It should be like this, very simple, very neat, and you should be able to write it on a business card. It should not be, you know, an essay long. So just like how trading needs to be simple. So let's get into some examples that I have for you, or the one example that I have for you guys. All right, so here is the date of this trade. So right here, we just went back a little bit to January 2nd, 20 January 2nd of this, actually just this year. This has happened last week. I personally didn't take this trade. I traded earlier in the session. I think London session I caught a trade, so I didn't bother New York, but I saw this trade. A lot of people in the community, a lot of people in my Discord took this trade, which was very nice. That means they're actually doing very well in understanding the trading model. So I'm just going to do a rundown of a quick top down, just so you guys can understand like basically what goes through my mind. So starting off on the higher time frame, like we always do, we have price kind of just accumulating in this area right here, and then we have this bearish for value gap resting above us that I had marked out. So going down back to the 15-second, now we want to recognize, where liquidity is resting. So we have liquidity resting down here, sell side, and then we also have buy side resting above here. Buy side above here, and then buy side above here that's already gotten taken. So we want to, at this point in time, it's very, very, very smart, to be bullish, of course, um, I'm sure on the bigger time frame there's an imbalance, but you can see right here on the higher time frame, we're rejecting off this higher time frame imbalance. We have kind of like a V-shaped recovery, market maker buy model towards this liquidity. So it'd be very nice to be bullish, but a lot of times what I tell my community members, and they understand this, is, and one of the things I learned from my mentors is we have to be observers in the market. What do I mean by that? We have to observe what's happening. We can't just take a guess on what's going to happen in the market. Like, oh, I think it's really going to go here, so I'm going to stick with that. No matter what happens, we're going here, or no matter what happens, we're going all the way down here. No, 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 my friend. No, Timmy, this is not what's going to make you profitable. You have to observe what is happening in the market. What is the market telling you? Is it giving you your hand? The market's going to give you it's going to give you its hand certain times in the market. And you have to be able to witness that and be observative and know when it's doing that. And so observe what the market's telling you by the confluences, SMTs, rejection, and all that, and take action on that. So right now, yes, I'm bullish. Be very bullish going into the morning, and then we just want to wait till open, pretty much. Waiting for liquidity levels to get taken, any major liquidity levels. So we go into open. Okay, we take this buy side level and this untouched daily fair value gap. Mark it out so you guys can see it. Daily fair value gap. Right, so that would be, like I had in the example, an area where we expect to reject a higher time frame rejection key level. And we also swept buy side some liquidity. So that was also on there, right? And then also zooming out, I'm going to pull up ES right here. As you can see, if we align this high with the high we just took, or the right here, there's a discorrelation right here. This high was taken, but it wasn't on ES. So what does that mean? That means there's an SMT divergence. And that's another confluence I have. That's a sign of manipulation. That's a sign of discorrelation, which is a big sign that we could possibly see a good reversal. So moving back to NQ, After seeing we have buy side swept, rejection off a higher time frame PD array. Okay, now that's pretty much advocating that we could be super, super bearish because we just took buy side. We're in a bearish fair value gap, daily fair value gap. We have a bearish SMT, right? What else could make us be bearish in the situation? Well, how I said it was my strategy was a little different from Justin Werlein's is I focus on key opens. Here's another thing. One thing in my trading model is I always focus on midnight open and 8:30 open. Why are those important? Because if anyone has, not a lot of people have really watched all of ICT's content, but one of the main things he's always talked about is time and price. And he means that in multiple ways. Like he always talks about, obviously there's macros, what time is it? Then look at price action, but also where are we at in price aligned with time, like midnight open and 8:30 open. If we're above midnight open, you want to, shorts are definitely in the talks, as well as 8:30 open. It's a big confluence to that. So if we're above midnight open and 8:30 open, that's called a deep premium for me, which means shorts are very much in the picture right now, right? If everything's aligning. Same thing if we're below it and everything's aligning, then longs, we're in a deep discount and price is at very, very cheap to buy, then we're looking really, really good for longs if everything is aligning, our model is aligning. So in this scenario, this is a very, very good short setup right here. Everything is lining up. We have liquidity resting below us right here, sell side liquidity. And then we also have some other sell side levels resting below us as well. We have, well, midnight open. We could have a target. We have these sell side levels right here, right here, right here. You get the point. All of these different liquidity levels. But for the sake of the example, we'll use this sell side liquidity. So right now, we're waiting for a change in the state. So what is a change in the state? So a change in the state would be basically the last, in this scenario, since it's a bearish example, we're waiting for the last up close candle, sequence of up close candles to get closed below. So the last up close candle would be this one right here. It's the one that took the high, and it's the one that created the SMT. So now we're waiting for a closure below. And this example does not have an IFEG. There's definitely one on the 30-second. I do not have access to the 30 seconds right now. But for the sake of it, there's definitely a 30-second for value gap if anyone can look right there. But now we're waiting for the closure below. And once we wait for the closure below, that initiates the entry, and then we're targeting opposing liquidity. Okay, we get our closure below. In this case, you could slap your entry right there, stop at the high, targeting the sell side level right there for a nice almost 2.5 RR. So, which is good risk. That'd be good risk right there. We open up a fair value gap as well, so that's another good entry you could also take. Classic 2022 model entry right here. Right there as well. You could enter on the fair value gap if you want to do it right there. Let's see how it plays out. Boom. Retest the high. Displace back into the range. And just like that, we have hit our TPs. And so this is just such a beautiful example of, and even right here could be a reentry, as if you didn't trust this model, we came back up, ran through this fair value gap, creating an IFEG, and close below this up sequence of candles as well. And it would have been a super, super late entry, but it's better than missing out on the move, I guess. But that would be a prime example of what I trade. And if you wanted to leave a runner even, which I'm a very big fan of, if you're able to. Since I trade Apex, I'm not really a big fan of leaving runners, but if you wanted to leave a runner to all these lows, right there to right there, that would definitely be ideal. Leaving you so much room to downside. We just absolutely don't. So if you align this model correctly and you apply it correctly with context and you understand why the markets move, as in rebalancing the inefficiencies, retracing to equilibrium, hunting liquidity, and generating liquidity, the 4 reasons why the markets move, and you apply this model can make you a filthy amount of money. And I recently just I'm pretty close to $1 million in funding with Apex. I trade Apex Trader Funding. I just passed 14 more evals, and now I'm almost max allocated with them. I'll pop a picture up on the screen of me just passing them. So I'm almost at $1 million in funding. Some people aren't a fan of that. Some people will be like, well, it's not real. Of course it's not real. It's demo simulated funding. But I have the same amount of leverage as a almost $1 million trading account. So, but I'm excited. I'm excited to get some payouts from them. I will be using this model to, really rack up those accounts consistently. So once again, I'm going to be going over the model one more time. We're looking for an area where we expect to reject from, right? We come up to this unfilled daily fair value gap, an area where we expect to reject. We're observing what's happening in price. We observe that we tapped in this bearish daily fair value gap. We're waiting, observing for a reaction. We have an SMT. We see rejection, waiting, slow. We go down. We see that we have an nice reaction off this. It's fine that there's not an IFEG, but we do get a change in the state. We have opposing liquidity resting below us. We're also above 8:30 open and midnight open. This also has liquidity below. That's a very, very good trade, my friend. And we just absolutely dump towards lower. So that's basically it. That is my trading model. I mean, same thing, vice versa with a bullish setup. It's very, very simple. Just try to you just flip it. It's the same exact thing. You're looking for a bullish, looking for price to come down into an area where you expect to reject. See buy side. So we're coming down here. We sweep sell side. Maybe we have an SMT as well. And then we get, change in the state of delivery. And a IFVG as well. Targeting buy side. So this is basically what it would look like on a bullish setup. And this is obviously would be the bearish setup. So it's a very simple strategy, very simple trading model, honestly. Apply it with context, understand the 4 reasons why the markets move, be patient. Be patient, that's the biggest part. Be patient, and this will literally help you change your trading. So this was just a quick video of my trading model on how I execute it, an example, exactly what I look for in all my trades. So you won't be seeing me trade wick off or EMAs or nothing like that, or whatever these other trading strategies are. This is the one that's worked. This is the one that's really helped me with my success in, at least with all these prop firms getting payouts and stacking up all these accounts. So I hope you guys really try this out. Backtest it at me in on X. Follow me on X, Evan_ICT, or even on Instagram. Follow my Instagram. It'll be at the top or in the description. So I hope you guys enjoyed. Let me know. Join my community. We all trade pretty much the same model. this model right here. It's helped change my life, and it can definitely change yours if you put in the work. All right. I hope you guys have a beautiful rest of your night, day, whatever time is watching this. Please be sure to drop a like and a sub. I'd very much appreciate it. Thank you guys so much. Happy New Year's to you guys, and God bless. I'll see you guys in the next one.